Good morning, everyone. Today is Monday, October 25th. It is 9:04 in the morning, and we are back live for Back to Basics. This is week number 4, and we've got Brian Cohen today sharing, and he's going to teach us all about the back end of business. Now, again, as we've talked about in the last 3 weeks, this can apply to any business where you're self-employed, where you're the own boss. And so Brian is going to share some tax strategies. He's going to share about LLCs. He's going to share about so much. So be sure to get your pen and paper ready. Be ready to take notes. And Brian, thank you so much for being here and sharing to teach us how do we get back to basics in business, specifically the back end, back to basics. So Brian, take it away, and thank you again.
Great. Thanks, Cody. Thanks, everybody. Glad to see everybody here this morning and anybody who's going to be watching later on. This in no way is going to be an exhaustive lesson, and a lot of it is lessons that I learned in business school or learned from things like this. So this is a book called Business Made Simple by Donald Miller. It's a 60-day entry book that has a lot of nuts and bolts to running a business. The most successful agents out there run their business like a business, not like a personal checking account or a personal home budget. So what I want to do is just give people something to take away. I should probably introduce myself. I'm pretty new to Anchor. My name is Brian Cohen. I really only do commercial real estate. My passion is actually not transactions. It is actually helping people to become the best they can. And so coaching is something that's very important to me, as well as consulting people and helping them make their business the very best it can, because I think that we get into business for a reason. And if we can have a reason, know that reason and have our hands on that reason every day, we can be more successful. And when we're more successful, not just monetarily, but we know why we're doing what we're doing, we can have a better life because we're making conscious decisions to work towards what we want and not just, some arbitrary goal. So we're going to start kind of from the basics, because there are people in every different stage of the business. So, first, straight out of the gate, if you're a brand new agent, most people are going to set up themselves an LLC, which is a limited liability corporation. And that's not to be confused with an S Corp or a C Corp, because those are actually tax designations underneath what an LLC is. Why would you want an LLC? An LLC is a level of padding between you personally and any sort of legal action. So if you had a legal action, somebody is against you, that extra LLC, that LLC means that someone would have to go after that business instead of after the person. So LLCs can be set up a couple of different ways. They can be set up as sole proprietorships. They can be set up as partnerships. They can be set up as normal corporations, which would be a C Corp. But most real estate agents are probably going to be advised by their CPA to be what's called an S Corp. An S Corp, and this is getting into tax strategy, which we will cover, but I'm going to just cover this real quickly before we get real deep into it. But the point of an S Corp is that it's a pass-through entity. So essentially that means that you have your gross revenue, you have your expenses, and then all your profit after that gross revenue is going to be passed on to your personal taxes, and that's where you actually get taxed. So looking at that for an S Corp structure, and I'm going to use this my iPad here, although it doesn't really show up real great. An S Corp is going, let's say we made $100,000. We had $25,000 in expenses. We had $75,000 in profit. That 75 is going to go to your personal account, your personal return for taxes. Then if you have other jobs or any sort of other revenue, that's all going to come together. Why is that important? Because this all impacts your overall tax liability. So we don't have to get too far into the weeds, but the big thing for that is to make sure that you are meeting with your CPA and showing them kind of what you expect to make and what your overall household income looks like, so they can advise you appropriately. So let's talk about profitability in general. Let me delete this. Most people, when we talk in real estate circles, is if I sell a $500,000 house, I'm going to make 3%. So that's 15 grand, right? That's how much money I made. What? Yeah, that's what's up. You know what I'm saying? And that is awesome. Don't get me wrong. But we have to, if we're going to run our business, this is not profit. That is gross revenue. Gross revenue. And then if we have expenses, let's say we're paying, our expenses at a minimum are going to be our taxes. And our taxes are going to be differentiated based on what our tax liability is. So let's say for all accounts, intents and purposes, that we have to pay $5,000 in taxes. And that's the only expense we have. This is how far into a budget or a cash flow that most agents would look at. Oh, I got a $10,000 that I made profit. But they forget that they bought coffee, car expenses, shirts, signs, all this other stuff that actually comes out of this 15,000. So before they know it, because they look at their bank balance, not a budget, they look and all of a sudden they go from having 10,000 to having 5,000, and they're like, I thought I made $10,000. Who stole all my money? Well, you did. So the point here is that as a responsible business owner, we have to create a budget that allows us not only to know where our money is going, but also that allows us to ride out the highs and lows that's inevitable with our business. So that's a cash flow issue. So let's say we all know December, not great a lot of times. January, not great. And if in November you looked at your account and you had $5,000 and you're like, cool, I can go buy whatever. And then December and February, or December and January come along and you have zero, you have to have enough cash in there to be able to ride out those times. So if you're running your business like a actual business, this budget should include everything you need for all of your expenses, what you expect to make minus those expenses, and really you should build it out so that you are able to pay yourself. So let's use an example. Let's say we are planning to sell enough that we make a gross $120,000. And so that ends up being 10 grand a month, but minus expenses. So let's say it ends up being, I don't know, 8,000 a month, because we have 2,000 expenses per month. So when we get a $15,000 check, we don't pay ourselves whatever the 15,000 minus our 15,000 minus our taxes. We pay ourselves 8,000, and we stick the extra back, that extra 7,000 back for those months where you only made, I don't know, $5,000. So that month that you only made 5,000, you have the 7,000, so you can still pay yourself that $8,000 salary. So a budget should include your gross. That's in this example, $120,000. It should include your expenses, and those expenses should be very specific. I give myself X amount for marketing. I give myself X amount for eating out and gas. I give myself X amount for taking clients to lunch or buying gifts. Everything, you should be able to track every single penny. And here's the reason why. A friend of mine and I were going over his year-end books the other day. He sold $1 million in products, but because he didn't know where every penny went, he actually overspent and he lost $80,000. He was $80,000 in the negative because he looked back and was like, oh, I forgot we bought 2 computers. In the moment, he needed the computer, but there wasn't a budget item for technology. And even if he needed the computer, but he didn't account for it, you have to take the money out of someplace else. Like, let's say you were planning on, going on a training trip or something like that, and you needed a computer instead, but you shift that money from one to another. It's very simple. It's the exact same budget stuff that you would do at home, but when you're a sole proprietor, you have to, it's all on you. So I would encourage people when it comes to budgets to get somebody you trust who's good with money, who communicates well with you, to help you make this budget. And then when you make 1 year's budget, the first one's always the hardest. Then the second year, it'll be a little easier because you have a little bit of history. You know that, May is a rough month for you, but you're crazy busy in July. So you end up, eating out too much, or you spend like $600 on gas where you normally would spend $200. So having that money already set aside, already having an idea of your budget and what to stay on, that you are paying yourself profit. So by not letting $80,000 just magically walk out on crap that you needed in that moment, you are paying yourself profit. So that's budgeting. For those of us who are on the call, does anybody have any questions before I move on to, that's budgeting and cash flow. Anybody have any questions on that or anything they want to cover before we move on to banking and payroll? Great. All right, banking and payroll. Every business, every one of our businesses should have a business bank account. Why? Well, if we have a whole separate budget for our business, that money needs to not be commingled with other things. A lot of people will also have like a business savings account that they set aside taxes. Also, if you want to, you could, if you're detailed enough, if you want to do 2 savings accounts, that's fine. Actually, Donald Miller in this book uses a multi-account accounting, but like, let's say under our $5,000 a month budget process, if he wanted to do, have one account that had your 5,000 every month, and you, for your marketing and all your other expenses or whatever, or sorry, it was 2,000. That's my apologies. Then you could have one of your savings account have your buffer money. That's that 5,000 to 7,000 that you need to ride out any issues. That's the cash flow. And then you could have a third one that has your taxes. If you play your taxes, here's the way my wife and I are both self-employed. So this is how we do it. And I'll tell you what, we save the appropriate amount for taxes every year, but because my CPA is awesome, and because we allow her to tell us what to do and what not to do, and not just kind of like make stuff up ourselves, normally I got money left in that taxes, which ends up being a bonus. So like, I think last year we had money left that we didn't have to pay out in taxes. I bought a BMW. No, wait, yeah. Or I went on vacation or something. So by watching what's happening throughout the year, being intentional and looking back at the end of the year, you can know you didn't spend money on something you didn't choose to. You can spend money on whatever you want. Just know you need to choose to do it. And secondly, when you have an appropriate structure in place, you'll always have the money for taxes, so you're never going to be short. But when you play your cards right, a lot of times it ends up playing in your favor, and having that extra tax money set aside ends up being a bonus or more profit for you. So it's awesome. All right, so let's move on to payroll. So there are some payroll companies out there that will help you automate this process. One of them is called Paylocity. I think that's how you spell it. And it allows you to give yourself a paycheck every single month like you would a normal paycheck. For those of us, I think most everybody's had a regular job before. We all know that if you made $2,000, that, 500 of it went to taxes and Medicare and crap. And then, health insurance was $100 and then our 401k was 150 or whatever it is. Paylocity allows you to actually structure it that way. And it will allow you to send things automatically pay your taxes, so you don't have to save them, because technically they're supposed to be paid every quarter. Paylocity will pay that and make sure it gets sent, and they'll send you a reclamation form or whatever the documentation is to say that it paid it. They will put into 401ks. They will pay your health insurance, stuff like that. It's essentially you giving yourself a W-2. I'm a big proponent of automate anything you possibly can, because if it comes to the end of the quarter and you need to pay your taxes and you need to go through QuickBooks and you have all these things, and it's just like you had a hell of a week, or people are calling and they're wanting to see stuff, you need to be able to go and sell and make money, and not, if there's a way to not have to do this stuff, it's better. As well as, I think it's $50 a month for Paylocity, and I think honestly it saves you from yourself. You can automatically save, have savings go into a checking account, 401ks, IRAs, all these things, so that it automatically happens. So when you decide to do it, it happens, and you don't have to say, well, this month I'm not going to save. I think I really want new golf clubs. Hey, if you want new golf clubs, that's great, but by all means. But, we all know that having that W-2 job and knowing that they were we never miss money you never had. And if it's going to something good, you're not losing it, like a 401k or IRA or whatever. So I definitely recommend things like Paylocity to help you pay yourself every single month a salary. And then at the end of the year, you just pay yourself a bonus based on extra profitability. You definitely, if you don't want to do this, you just have to have a structure. That's the biggest thing, is if you don't have a structure, you'll just do whatever, and that doesn't keep you on track for your goals. All right, so let's dive into the tax strategy, which is one of the biggest things that most people need help with. That is, if nobody has any questions. Okay, great. All right, so tax strategy. So we're going to look at tax. So my accountant told me something that was super helpful, and she said, don't spend money to not pay taxes, because you still spend the money. But if you need something, then you can buy it for your business, and you essentially get a discount on it. For instance, 2 years ago, we owed like $5,000 in taxes, and I was thinking about getting a third car because I have a truck and it's not good on gas, and I was having to go into Atlanta all the time, and everybody knows that sitting in traffic in a huge vehicle is sometimes a pain. So I asked her, like, what does my tax implications look like if I buy this car? And she said, well, your car is $10,000. It is, and if you buy it, we can write it off, and it's going to decrease your tax liability from $5,000 to it was like $2,800 or $2,500. So essentially, I got a $2,500 discount on buying that car. Obviously, if I didn't have the $10,000, it's not worth it. Or you don't actually need it, then you're just spending money arbitrarily, where you could put it in an IRA or just pay yourself that difference. So having the takeaway there is you need to have a good CPA, and we need to meet with our CPA at least twice a year. So you should have a planning session with your CPA, and you should have a tax session with your CPA. I actually do a third, and it's because we set our business up this way. Is I'll do a tax session, which is like in February or whatever, but we do an end of the year as well. So I have mine December 9th. I will go and have like talk to the accountant. We'll say, here is, we know how much we've made. We know how much we've spent on like tax deductible things. And here's how much I'm going to make for the rest of the year. What's our approximate tax liability look like? Because if we have another BMW situation, but like, oh, if you're going to get taxed an extra $5,000, but if you make an IRA contribution of $5,000, you're only going to owe $2,000 taxes. I hope that makes sense. But I essentially can give myself a bonus in my retirement by knowing how much I expect to make on my tax tax return. So here's a couple of things to keep in mind as we figure out what your tax liabilities are. If you have children, let's see if this thing will work. Does my iPad freak out? Sorry, just a second. I think my pen died. Okay, there it goes. All right. So if you have children, there's probably a child tax credit. If you make under a certain amount, I think it's $72,000, there is a daycare tax write-off. I think you can write off 30% of daycare, something like that. If you have, so we're self-employed. So most of us pay our own insurance. And hopefully you have an HSA, which this year I think is $7,100 of contribution. That's $7,100 that you can put in this HSA that is tax deductible, that is to be spent on health insurance type stuff, medicines, chiropractor, stuff like that. So that's $7,100 that you can put away that decreases your tax liability. Same thing with the FSA. An FSA is a flexible spending account. Some of us have it, some of us don't. But a flexible spending account, this thing is giving me trouble. Flexible spending account allows you to do things like pay for daycare and babysitters and stuff like that, and it's tax deductible. Your health insurance is tax deductible, but it's not tax deductible on your business. It's tax deductible on your personal taxes. That comes to and why we want to have an S Corp, because we pass on that money and then you take your tax deductions for your personal account. And then we have Roth IRAs and regular IRAs. A Roth IRA is post-tax, so it's not tax deductible, but you don't pay taxes down the road when you collect on it. A regular IRA is tax deductible, but you'll get taxed down the road when you withdraw, in most cases. So these are CPA questions of, do I think I'm paying a higher tax rate now than I would in 40 years when I'm going to take it out of this IRA? A lot of times, Roth IRAs, if you're not making a lot of money, you can put away a Roth IRA and your tax liability in the future is going to be a lot higher. But some people, it's the opposite. It depends on whether or not they want to take that reduction in taxes. So let's just look at how overall, oh, sorry, I want to cover one other thing. There's something called a Sep Ira, which is a self-employed, I don't remember if the P is in the employee or if it stands for something else. But this is a way for us as private contractors that we can fund our own 401k. I'm pretty sure that the 401k cap for us is, or the amount that you can put into a 401k is like $21,000 a year or something like that. So if you think about it, you could put away like $6,000 in an IRA, and that's for each taxpayer. So if it's a husband and a wife, that's 12. And then if your SEP 401k is like 21,000 ish, that changes. I might not remember it correctly, but the point is, you could essentially save $27,000 per person for being self-employed. $27,000 every year is more than most people will save for retirement. And it also just lowers your tax liability. So if you don't need, if you're making good money and you want to pay yourself, it pays you to in paying less taxes, and it also helps you to actually have money for when you retire and not just money for now. So let's look at how these things work. So let's say we're again making $120,000. Let's say we have we have 2 kids, our tax credit's probably $4,000. We had business expenses of $10,000. Our mileage was $5,000. Remember, mileage is like 55 cents per mile. Keep track of it. It comes off as expenses. You can either take mileage as a deduction, or you can take actual car expenses. Whichever one's higher, take that one. So let's say we got all this, and then we're putting 27,000 into our IRA. When we go back and look at this, that's 19 and 27, it's 46,000. So that's 74,000, I believe. That's $74,000. This is what we're going to get taxed on. The reason we want to have this 4,000, we want to have this and this, is because it decreases that 74,000, which is going to end up being like $25,000 in taxes versus 120,000 was going to be like $30,000 taxes. So that's why we want to use tax. Why we use a tax strategy. So you're going to pay taxes. You just want to minimize them and put as much money into places that help you versus places that, I mean, I guess having roads and stuff definitely helps us, but at the same time, having retirement, you can pay yourself retirement. So when you have a tax deductible expenditure, essentially you're paying 70 to 75% of what the actual value is. So you're getting 25% off of whatever that is. All right, so let's cover one last thing, and that is what I call, and there's a book called The E-Myth. If you've never heard of it, it's essentially a book about how when you're an entrepreneur, you kind of have to be everything. And we probably all know what that's like. The E-Myth is, all these things that we're talking about. I got to do the taxes. I got to do the payroll. I got to do the marketing. I got to do all this kind of stuff. So, but for us, if we can have systems in place, like budgets, like having an accountant, like having a bookkeeper, I would recommend a bookkeeper or somebody who's really good with QuickBooks. So you know every single penny that's going out and compare it to your budget. By having people, now it's going to cost you money, but it gives you back time. And if you're doing it right, having a budget and all these things, it's going to end up increasing your profitability, or at least making sure you have profitability, because nobody wants to make $120,000 or be like my friend who sells $1 million worth of stuff and ends up at a negative. That's got to be a sobering and terrible feeling. So if there's a place that we can leverage a relationship, a system like Paylocity, a bookkeeper, maybe a marketing something, contract close is a huge one that gives us back the time and allows us to operate in what we are really, really good at. Because when it comes down to it, being a real estate agent isn't about closing deals. It's about creating leads. I mean, if we're honest with ourselves, everything else is a byproduct of creating a lead. We have to create leads every single day. That is what the job of an agent is. That is 100% what you're responsible for doing, because you can close deals all day long, but if they don't originate from someplace, we all know that there's not going to be money to be made if there's no leads to be had. So if we can put in systems and people in place to make sure that we can make that number one and focus on it all the time, it's going to make our revenue go up. And by having systems in place, it's going to make our profitability go up. And if by having good CPAs and a tax plan, that's going to further make sure that we're investing in ourselves via 401ks, IRAs, tax credits, HSA, all those things, and allow us not to feel that pinch because we didn't have a plan. It's the biggest thing. That pretty much covers back end of business in a very snapshot coverage. Again, Donald Miller's Business Made Simple is a great book. It's 60 days, and you read it's like a 5-minute chapter every day. And then he also has a 5-minute video. It's incredibly helpful. There's tons of resources out there to help you set this stuff up. I will be doing some small business coaching along with Cody, and that includes productivity coaching. Also, like, I coach for a company called Unique, which is kind of a life design coaching. So at the end of the day, there are people that can help you make these plans and people that can help you be successful, so that you don't have to fall into the E-myth and do it all yourself. So if you have a question about any of this stuff and you want to go over it more in depth, please give me a shout or call Cody, and we'd be happy to go over this stuff with you. If you need help making a plan, making a budget, even just projecting your numbers or setting sales goals or whatever it is and following through with them, we want to do that to help you be successful. So that's going to wrap up today's Back to Basics. And next week, we are going to jump in again on Monday to, I think Chris is teaching, but I'm not 100% certain because we had to shift it around a little bit, but it's going to be good regardless. So for those of you who are catching this on the video, thank you for checking in. For those of y'all who are here live, I appreciate you listening to me ramble for 37 minutes. And I hope you got something out of it. Again, if you have questions or you want to go over it in depth, please give me a call. And that's going to conclude it for the day. Have an awesome day. I think that's what he always says. Awesome week, awesome day.